Good afternoon, everyone. I'm Stacey Scott, and I'm here with Graham Wickham, President and CEO of Wickham Financial and Insurance Services, and we're back with you today with our weekly wrap-up. Graham, can you tell us what's been going on in the market this past week?
Yeah, we had a pretty choppy week, still in the middle, or I guess more at the tail end of earnings. But again, a pretty choppy week all in all for trading. A couple items that hit the forefront of the news last week. The Federal Open Market Committee, the FOMC, raised interest rates for the 10th time in the past year, 25 basis points. At the same time, we had a strong employment report, kind of reinforcing that the Fed's probably going to have to stay higher for longer. Didn't seem to spook the market too much because we had a really big rally, pretty good rally on Friday. So if we break it down by the indices, the S&P 500 and the Russell 2000, off about 0.5% and 0.8%, where the NASDAQ was pretty flat. Two areas that kind of pulled back, we saw some really good pullback, would be energy off about 5%, and crude oil pulled back about 7%. Financials off about 2.5%. I think the hangover and the concern that we continue to see in the regional bank sector causing some pullback on those financial areas. But we did see a jump in layoffs. So maybe that's a hint that some of these strong employment numbers might start to reverse. I think the Fed probably wants to see that employment rate go up a little bit so they could take their foot off the gas. We look at internationally, we got the European Central Bank opted for only about a 25 basis point hike, despite the April CPI ticking up to about 7% year over year. We look over the Eurozone, retail sales fell more than expected. If we then swing over to Australia, we saw their bank, central bank, surprised with a 25 basis point hike. Now, last but not least, looking at China, that everyone's wondering, is China going to continue to be the growth side of the market? They're going to be the consumer? Maybe not. Their manufacturing slipped back to a contraction level in March. So we'll just have to wait and see on how quick, how fast China can help out the global consumption.
Okay. Well, we mentioned unemployment has been relatively low all year. And how does that really affect the Fed's stance on things?
Well, I think the Fed would like to see demand come down. And how do you bring demand down, which hopefully will bring down inflation, is you have to have people that are fearful of their job or if they can get a pay increase and so forth. So you need the unemployment rate, which ticked down last week to 3.4 to get up to maybe the 4s or 5% range, kind of put a little fear in the market so consumers' demand for goods and services come back. Hopefully inflation will follow.
All right.
Yeah.
And, with the growth side of the market really starting out strong and outperforming the value side of the market, do you think that's something that we can expect to continue?
Well, we'll have to see. History is kind of interesting on this. So we saw, for most of our viewers here, there's a struggle between growth stocks and value stocks. Value a little more established, maybe dividend players, maybe a little out of favor. Growth stocks tend to be kind of the sports cars, if you might. They're taking the extra revenue, or they have revenue out in the future, and they're reinvesting that. So they tend to look to possibly grow faster than the value side. Well, if you look back since 1927, value has outperformed growth by just over 4%. But over the last decade, growth has really outperformed value. And we're going to continue, as you stated, seeing that since the start of this year. I am thinking that we'll probably see a reversion to the mean of that. I think you'll see value start to outperform growth, especially if the Fed has to stay higher for longer, which hurts growth earnings or growth stock earnings in the future.
All right. Well, thank you so much for that, Graham. And thank you to our viewers for joining us today. We do have our retirement planning today class starting this week, and we do have some spots still available. So if you are at or near retirement age and you'd like to find out everything you need to know about beginning that process, please give us a call or check out our website and we can get you in to our class, and we hope to see you there. Thanks again for joining us. We look forward to seeing you next week on the weekly wrap up. Have a great week.
Take care.